We are back with episode 2 of Wizard North, or True Wizard, however you want to describe it. Here with Adrian Morris from True North. Adrian has done some amazing analysis lately on what is really driving the MSTR price action. And in my humble opinion, it has not been given the eyeballs that it truly deserves. And so today's presentation will be mostly about first principles or first causes. We're going to be doing a lot of talking about markets and multiples, mNAV, perception, market valuation, and I'm going to be grounding it in an Austrian economics background. So think Ludwig von Mises, Frederick Bastiat, little crackhead Adam Livingston back in the day when he was in high school. He was reading Austrian economics. That's a joke, Adrian. I've never done drugs, just to let you know. It's a joke. But anyway, Adrian.
I wouldn't judge you either way. I wouldn't judge you either way, man.
Adrian, how are you today, man? Great to be with you.
Same here. I'm doing well. I think that you and I have been, how long have we been bumping DMs back and forth? A few weeks now?
I think it's been a few months. We've had some really good discussions for a few months now, I think.
Yeah. I think, but a few weeks talking about this, few months talking about everything else. And yeah, no, I'm really excited to get on with you. I like your vibe, and I think that we can get some high quality information out there in a way that is digestible and try to really steer the MSTR conversation, because I think there's just a lot of FUD. And there's a lot of people that have just been screaming into the digital ether about things. And I want to try to put people's minds at ease, center the conversation, see what we can do.
100%, man. Yeah. You've been like one of the few people I've talked to where it seems like we're really on the same page about mNAV being sentiment. And I feel like that is such a core aspect of the entire MSTR trade, not only MSTR, but the entire Bitcoin treasury company phenomenon. It feels like a lot of people are misinterpreting it, and it's weird because it's been very intuitive to me ever since I understood what and ever since I first heard the term what mNAV was, right? And I think it's because it's ingrained with me how I view markets and investing. Like price to earnings is another ratio, that's been intuitive to me, and we're going to dive into how me and you view these things, and maybe we can bridge some information to the investor community. So I think we should just get to it, man.
Do it.
Love it. So we're going to be laying some groundwork, folks, and this is going to be the most boring slide of the entire presentation, but this is the fundamental, most important thing that we need to realize, because if you're not defining terms, if you're not having a grounding philosophy in how you're viewing valuation itself, how are you expected to make good decisions? And there's this term that's out there called Praxeology. It originated from Ludwig von Mises, the Austrian economics domain. And essentially, it is the systematic deductive study of purposeful human action, most closely associated with Austrian economics. Beginning with the axiom that individuals act consciously to achieve chosen ends using scarce means. And this is the important part. It employs logical reasoning rather than empirical measurement to derive the laws governing value, exchange, capital, and market coordination. So there's some big buzzwords here that are very important in this next sentence. Subjective preferences right here. By focusing on subjective preferences, marginal utility and time preference, Praxeology explains how prices and institutions emerge from countless individual choices, highlighting methodological individualism and causal realism. In this framework, economics becomes a branch of Praxeology, interpreting all market phenomena as the aggregated consequences of intentional human behavior. So you might be wondering, Adam, what the hell does all of that mean? And the point that I want to make, and hopefully with Adrian, I assume that he agrees with me, I'd say that we're probably close to 95% on the same page, and we'll probably be trying to get on 100%, is that I really think that the mNAV framework lines up with Praxeology, because the way that I view mNAV is that each trade is printing the price times the shares outstanding, and then it's divided by the value of the net assets, obviously. So each trade is a conscious choice that's made by both sides. And so that's going to bring us to our next slide here. We're going to be talking about what is price. And this is really the big enchilada, because obviously everybody cares about the stock price of MSTR. I get constantly, Adam, Bitcoin per share doesn't matter because the only thing that matters is price. And this is the big picture, folks. Price itself is an emergent phenomena. It is a snapshot of sentiment because it is the reflection of thousands or millions of transactions happening between individuals with different valuation preferences. So basically, there are two sides to every trade, And there is a willful acknowledgement of consent in a non-coercive transaction. Me and Adrian decide to trade MSTR. We agreed upon a shared upon price, both having different valuation systems, and we execute the transaction. Now, therefore, mNAV, which is the multiple of the net asset value, is, the measurement that strategy is using to gauge the multiple of what their net assets are, the multiple what the stock is trading at. And that is literally just sentiment, because it is price times the amount of outstanding shares in the numerator. And then you're just deciding to denominate the resulting sentiment snapshot as a multiple of the net assets. So price is an emergent thing. Adrian, agreed? What do you think?
I agree with most of that. So here's why. Praxeology actually aligns with the way I tend to view things as well. I use logic. And one of the things that I have tweeted about and posted about is something called modus ponens, which means essentially using a logical framework of if, then this to derive the causal chain of events, the causal chain of understanding, the causal chain of an emergent something like price. So the challenge that people have with this is that intuitively they're saying in their head, price can't be a reflection of sentiment. mNAV can't be sentiment. It's fundamentals. It's profit. It's PE ratios. It's EBITDA. It's so many different things. But what they don't realize is they're not making an objective statement. They're actually making a subjective analysis based on ad hoc or post hoc data that they're taking in to make decisions. So here's the reason why you can think of price as an emergent quality. Markets are forward looking. And if markets are forward looking, they're essentially looking forward to an unknowable future. You're making a bet today that the price will be higher tomorrow. That's the only reason why you'd buy commodities. That's the only reason why you would buy equities. That's the only reason why you would invest. You're not investing today to say that your money is going to be worth the exact same dollar amount in 20 years. What you're saying is, I think this equity should be worth more than it is. Therefore, I'm willing to place a bet on it now to get benefit from it in the future. That is not a objective course of action. That's a belief-driven course of action. You cannot know what the price is going to be in 1, 5, or 10 years. You can believe and hope and form a framework for what the price will be and what will justify that price. But the decision to do that is belief-driven. And what we see in the markets is the emergent relationship between different players in the market. So like you and I will have an investment in the equity, but have entirely different views on why we have that investment. You have different players in the market, institutional players. You have businesses, hedge funds, so on and so forth, that are all playing both sides of the equity, both sides of the commodity, trying to come to a decision that fits their framework, and then they're deciding to long it, to short it, to invest it, to trade options, to do whatever. All of this is highly subjective. And when it comes to mNAV being a multiple of net asset value, if you think of what MSTR is, when it first came out, what was the common talking point? It's a beta to Bitcoin. And then people said it's a leveraged Bitcoin equity. And now people are saying that it is a leveraged Bitcoin equity that has preferred offerings that are establishing a framework for digital credit that's backed by Bitcoin. Do you see how the narrative is
It's moving really fast.
it's evolving, right? That is not a objective process. That is a process based on market perception that's being aggregated at the price level and that's being expressed in the different narratives that exist around equity. So simply put, I always like to ask people, if fundamentals drive markets, if valuations are driven on fundamentals, then explain to me why anything has a multiple or a ratio above 1. A truly fundamental, objective, logical framework would have something valued at its value. You would take assets, liabilities, income, so on and so on and so forth. You would aggregate that. You would take the number of total outstanding shares, whether it be total or fully diluted. Then you'll come up with a share price, and that'll be the price. But every single equity, every single one, trades at either a multiple or a discount.
Yeah.
So if they're trading below value and they're trading above value, that is not anything but subjective projections into the future expressed in price. And that is why markets are forward looking. So this is all sentiment driven. And we are finding different rationalizations for it. But the fact of the matter is, you're making subjective assessments, and that's being manifested in the market in something that we know as price, which, as you've so succinctly pointed out, is an emerging quality of all of these different factors.
100%. Yeah. Like at the end of the day, I think the best way to phrase it is that if you're just trying to make a definition of price, it is just like a signal that is very dense with information. Uh, and it's formed at the margin where the most motivated buyer is going to be finding the most motivated seller to where the transaction occurs. And so it is a signal that is information dense with wildly different valuations. Like you think of like all the particular reasons that anybody could value an equity. It's all baked into thousands of these transactions happening, and price is emergent from all of those things. So I think that this is why it's so important to understand from first principles what this actually is, because people say that the only thing that matters is price, and I don't even think that they know how to define it. I know that me and you have been in some really heated dialogue on X with people and disagreements about strategy stock price, and it's funny. It's almost like, okay, guys, well, you define these terms, and then we can see if we can come to an agreement. I don't think a lot of people can.
No, they can't. So, and there's a few reasons for that. So let's talk about what you said about price being set at the margin. It
Mhm.
is. Well, one of the things I say is that price is set at the margin, but the multiple is set by the market. So the reality of it is that any multiple that's seen is set at the market, but that multiple is going to be expressed in price, and that does exist at the margin in the executive framework that you just described. There's going to be two people, buyer and a seller, and that marginal relationship is where the price is going to be expressed. And that is just how markets work. Now, if we use the example of like Bitcoin per share, Bitcoin yield, and people saying that the only thing that matters is price. Now, here's where I can find a middle ground between the two. When I first invested in MSTR, Bitcoin per share and Bitcoin yield weren't a thing. The whole purpose of the investment was outperformance compared to Bitcoin. It was that if I put $1 in MSTR or $1 in Bitcoin, Bitcoin's going to give me 1 point whatever, MSTR is going to give me 2 point, 3 point, what have you, right? It's going to outperform without any sort of consideration towards Bitcoin per share and Bitcoin yield. However, now, because the narrative, because the understanding, because the framework for this investment has evolved, we now also have Bitcoin per share. We now also have Bitcoin yield. We now also have considerations about BTC gain and how we should value that, how we should value the equity, and should Bitcoin derived earnings be a valid framework? Is Bitcoin gain the valid framework? You see what I'm saying?
Yep.
All of these things are evolving. So just on this call, we have one individual that is in strategy for talking about Bitcoin per share, Bitcoin yield, and those are important metrics. And then we have another individual and myself that's saying, yeah, I understand why those are valuable to you, but that's not what's driving my investment.
Right.
Because when I originally got into investment, those weren't necessarily a framework that I had. So it's not an either or. People need to accept that they're each going to have their own different valuation frameworks. And just like we're trying to say here, that all manifests at price. But the price is the emergent quality of all these different things. And it's not going to be fundamentals driven. It's going to be market psychology driven.
And this is exactly why that you see the tension within the shareholder base to begin with. Like, the one thing I'm trying to like really go hard in the paint with the messaging on is like, I just believe the thesis for investing in the equity is fundamentally different than what it was a year ago. And you see, I don't know what percentage of the people that are unhappy necessarily, but you do see at least somewhat of an outsized minority saying that, they missed the leverage. This isn't why I bought it. I bought it to outperform Bitcoin. And you can tell that like it's evolving. Each individual invests for a different thesis, and they try to kind of articulate their thesis onto everybody. And that's where we see the tension coming from. So I don't know if you agree with that statement, Adrian, but at
No,
least that seems where the negativity comes from.
I do. And one of the things I say is bias starts at basis. So your bias on the equity is going to start at your cost basis. For me, getting in 2022, all of this that's happened in the last year is noise, because I've already rode it up and rode it back down and rode it up and rode it back down again. I've experienced the volatility. And the thing that prepared me for that was Bitcoin, right? I've been in Bitcoin for quite a long while, going back to 2012. I have experienced the volatility, therefore I was prepared for it. But even at times when I've seen strategy take wild swings in certain days early on, I've been like, why? But I had to kind of take myself out of it and really assess it and say to myself, well, if it's going to be a leverage play on Bitcoin, therefore that leverage is going to work to the upside and it's going to work to the downside. Whatever multiple we see, just think about it again from a very logical standpoint. If you see outperformance to the upside, you're going to see outperformance to the downside as well. That's just going to be the nature of the beast. And the reality of it is that this is designed to outperform over time, not over time frames. So everyone's talking about, well, in 2025, it's been da 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 da. Okay, fine. That's one time frame. Go to 2024, go to 2023, go to 2022, and 2021. Everyone can play that game. If you're talking
100%.
about
You
20,
can
if
always
you're
draw
talking,
the lines and pick your time frames.
exactly, bias starts at basis. So if you are disappointed with the price action this year, okay, I understand. But that does not mean the entire thesis for the investment is now flawed. All it just means is we're seeing a period of underperformance. That's going to happen.
Of
It's
course.
kind of par for the course.
What I tell people is, you should start a YouTube or X and talk about stocks or equities or crypto that only ever goes up. You should talk about those because I'm sure that you would get a lot of popularity. So anyway,
Well, I mean, yeah, like, and it's. I honestly think that people, and we're probably going to get into this. People think that Michael Saylor has a lever he can pull.
right? It's in his
That he,
basement. He can just
yeah,
decide the mNAV.
he is literally just saying, you know what I'm going to do today? I'm going to say that mNAV should be back at 2, so I'm just going to make that happen.
Let it
And like,
breathe.
let it breathe, right? Let the mNAV breathe. It's just
We're going to get into that further in the presentation here. We have a fun let it breathe slide, and we actually incorporate a meta planet example as well. But to continue, let's just sum it up by saying, like, praxeology, it says that human action is purposeful. So every single possible move in the market is literally an attempt to improve one's situation. Both people on both sides of the trade, they're forward looking. They want to make it out better by making the trade. And, that just proves that value is subjective. And this is why I cannot stand when people say that Bitcoin has no intrinsic value or anything has intrinsic value, because individuals, they rank their ends and then they choose their means. So there
precisely.
is no objective scale. So we're going to go ahead
Intrinsic
and
value is a myth, really. It can
100%.
intrinsic value can be whatever the hell you want it to be.
Yeah.
So
Despite what Peter Zion thinks. Yeah. Sorry, no such thing. And, not to get overly political, this is the last part of the politics, guys, but this is why central planning doesn't work, because, obviously a planning board, like government bureaucracy, they can't replicate the real-time information that's happening in markets and legislate based on that. Like there's too much variety. So not to get too political here, but we do like to have a little bit of fun. I see Adrian looking down. He doesn't want to get into the political debate.
we can do it if you want, but
No.
I'm just going to say that there's validity in that statement. Yes.
Cool. Love it, man. And right here, man, like we're getting a bit ahead of ourselves. This is where I was going to talk about intrinsic value being a myth. I just view like prices are signals, they're not equations. So it's individualism, man. The macro outcomes are always going to trace back to micro decisions. I don't know if you have anything more to add on this, specifically on the intrinsic value piece, but I do think, like, in terms of pervasive myths that just infect the investing community at large, this one is probably the number one most ingrained thing that people have. And it's requires a lot of deprogramming, I think.
It does, and we can even go through, like, we've kind of touched on each of these already with the shared belief mirror of psychology and formalized guesswork.
Yeah.
But in reality, let's look at the formalized guesswork example. Let's look at something like discounted cash flow. You and I can look at the same balance sheet, the same data, the same metrics about the same company, try to do a DCF model and come up with two different conclusions.
Exactly. You see it all the time. Yeah.
When these firms come out with price targets for MSTR for anything, when they do a sum of the parts valuation, when they do whatever valuation that they want, what they're trying to do is, and this is what people have a hard time realizing, that analyst that sits down in that chair, or that group of analysts that sits down in that room to come up with those valuation frameworks, they are not looking at that data and then forming an opinion. They have an opinion that they're then using the data to try to prove or disprove, is essentially what they are doing. because you cannot tell me that they're going to hear about an equity, they're going to know about an equity, go into it blind, and have no subjective impact, and subjectivity has no impact on what they're seeing. That's not possible. We do not view data, we do not view information in a bubble, we do not view it with a blank slate. That is not what happens. And that tension is manifested in the market in price, that's manifested in volatility, that's manifested in implied volatility, which people don't understand is simply the market sentiment about the sentiment of the underlying equity.
Yes, it's the
So
sentiment of the sentiment. Yep.
it's sentiment of a sentiment, because price is driven by subjectivity and sentiment. Implied volatility is what the market is saying that the strength of that move should be in a specified time frame. Therefore, it is the sentiment about market sentiment. All of this is the manifestation of individual actors at the collective macro level, and it's something that takes time for people to understand. But I've been researching this for many years, and I think it's really the truth of the matter.
100%. And, at the end of the day, you're going to see analysts disagree on whether a 100 PE for DoorDash is overvalued or undervalued. Like, I thought Costco was overvalued for 5 years and it just continues to go up at a high PE. And I think that the problem is exacerbated a little bit because we're in such a new paradigm. Like this last 6 months, man, myself included, you're seeing so many people trying to come up with these new metrics and how to attempt to make sense of all of this information, right? And I do think that Bitcoin per share, for example, I agree with what you're saying on it for sure. But what I'll phrase is that I don't think that there is any data that immediately like guarantees a decision. And you see a lot of people saying like, Bitcoin yield doesn't tell me what to do. Bitcoin per share doesn't tell me what to do. I see that complaint all the time. And it's like, there is no metric in investing at all that tells you what to do. That doesn't exist. It's all a subjective valuation game on the individual level. And so your point about discounted cash flows, I want to make that clear, is that like no matter what metric you're using, there is no handholding in investing. There's no like automatic robot buy button. Yeah, there's algorithms that exist for sure. But when it comes to human action, it's just, I think that people are looking for something that's not there. Like there is no something that tells you what to do. There is no mNAV that means a buy. There is no level of mNAV that means sell. And I think a lot of people have trouble wrapping their heads around that.
Not universally. And even in the algorithms example, as someone that's written algorithms for quite a few years, even algorithms are manifestations of the bias of the coder. Because one trading desk may use a certain algorithmic framework, but the tweaks that they make on that are based on human input. And what people need to understand about algos is that they are autonomous actors in the market. They are not independent actors in the market. An independent actor in the market is you or I. We can buy or sell as we see fit. An autonomous actor needs a certain set of conditions before they can act. That is the difference. And that is why algorithms and AI even has simply amplified the human bias and taken it down to a millisecond level. That's what's really going on right now. And for anyone that doubts that, I say, well, whenever, and again, not getting political, but if our president tweets about tariffs and the market takes a shit, do you really think that's because all the hedge funds are sitting at their desk and saying, yep, time to sell? No, it's because they have sentiment analysis that's going on. The sentiment analysis is reading tweets, and they're telling it that if someone tweets about tariffs, it's time to sell. That's a judgment call. While if someone tweets about tariffs, I'm not selling. I'm thinking, oh, buying opportunity.
Right.
There's all kinds of ways that this plays out, and there's all kinds of ways that the market represents a manifestation of human bias, and it's a collective belief system. The market is a myth maker. And it's all about what myth has the strongest narrative at the time.
Yeah, like at the end of the day, it's all signals, right? It's all signals, and every single one of those, they need interpretive judgment. And that's done at the individual level. And, we can keep moving on here to see what else we have. But at the end of the day, that's how I'll sum up the prices of perception. Intrinsic value is a myth. You got to think of this on an individualized basis. There's nobody to hold your hand on some objective reality because nobody knows when nobody can possibly know every variable that goes into price. So people tend to to really overestimate what people are capable of, I feel like. And, you know, I don't know if you have anything you want to add, Adrian, but you just got into market as a myth maker. But
Oh,
yeah,
yeah.
couldn't agree more.
I didn't even mean to. I just kind of went with it. But the reason why, and this is, I think that was one of the posts that I did, and you agreed with it as well, with market as a myth maker. People, and this is one of the talking points that I hear: price follows narrative, or narrative follows price. Which is which? I argue that prices follow narratives. Their narrative has to exist before the price can become emergent. And that's why market as a myth maker really kind of sums that up. It is not as if an equity exists in a bubble and a valuation is put out there and a share price is set and then people are reacting to it. It has to, people talk about first principles. I like to talk about first cause. First cause is always the individual actor. First cause is always the result of the collective actions of all the individual actors. Then price is set, then narrative is set even further, then price is set further, so on and so on and so forth. But a narrative has to exist before the price can be met. And once the price is met, that's when narratives start to shift based on price. And it's a reflexive relationship. But first cause, first actor is always sentiment, subjectivity, market psychology, the individual actor, the aggregation of human actions. That is always what sets the action into motion for price to be realized. And markets as a myth, we are living in a market that's driven on myth because they are forward looking. We cannot know tomorrow. We are guessing. And it's all about which myth has the strongest narrative. Right now, and I'm not calling AI a myth, but using it as an example, the AI trade has one of the strongest narratives I've seen in my entire life.
Of course.
That's why it's not stopping. Everyone
Right.
keeps waiting for it to crash, waiting for it to crash, waiting for it to crash. Every single day, I look at any kind of financial periodical or show. Are we in a bubble? Are we in a bubble? It's constant. Everyone keeps waiting for the bubble to pop because they don't understand why it's running. Even if we have a massive correction, I don't think it's going to stop anything. I think we're going to go down and go right back up because Nvidia crashed below $100, and I was telling people I'm buying heavy, and they're like, "Oh, the bubbles pop, the bubbles pop." And now Nvidia's over $200. So again, you have to know what you're looking at. You have to understand. This is why what you said makes sense. You have to have the right framework to look at the market before you can make decisions. If you're operating from the wrong framework, you may not be seeing the market for what it is.
Yeah. NVIDIA was a big reason why I got to pseudo retire at 29 right before MSTR, before you and MSTR True North really helped me along there. So thank you, Adrian. But the way that I'll frame it is that, like, price crashes, they are literally just, they are implosions of narrative. It's like the story is failing. Like, you see the story lose cohesion among the investor base, and that's when you see bids start to evaporate. And it's just like, you know, the inverse of that is like when the obviously the story is incredible, and the hype seems to be justified based on what people are telling themselves and what they're telling other investors in the market. And, you know, I want to ask you how this relates to, you know, your round trip investing. You said that you've ridden some things up and back down. You're fine with the volatility. So, like, how do you stay grounded when you see the story losing cohesion amongst, like, the broader investor base? And I just want you to spend some time, you know, articulating, like, what it's like to stay grounded in your own thesis, because I've done the same thing with MSTR. I've done it with Metaplanet, where I'm taking a full round trip and I keep going back to the drawing board, and I keep telling myself the reason why I'm invested isn't because of what other people are telling me about this. It's because of something else. So I don't know. I want to know if you agree that, you know, crashes are just the implosions of the narrative, and how you stay grounded when that happens.
Yeah, so I can give just a quick rundown of that. I actually started investing back in the original dot-com bubble. I had money that I saved up that I gave to my parents and I asked them to invest for me, right? And I thought I was going to be a baby millionaire at that point because I was making money, it was going up. I was checking prices. I was really, really getting into it. My high school business class, our one of our big projects for the year was we had to manage a portfolio, and I thought I was a genius, right? Because everything that I was investing was going up. Well, we all know what happened with the dot-com bubble. So that was my first foray into markets, losing all my money and being left with like $12 or whatever the hell. I think
You weren't invested in MicroStrategy that time?
no. If I was, my God. But no, I don't know if you heard of a company called Excite.com.
Have not.
Look into them. They were one of the first real search engines. But that's neither here nor there. And I was investing in a few other things. But I say that to kind of lead into everything. My foray into markets was very, very early. And ironically enough, I've now been in markets for well over 20 years. So I've seen boom and bust cycles. When I was in my first career and I was, I had my 401k, I was doing everything the way you were supposed to do. Then the subprime mortgage meltdown happened and boom, I lost a bunch of money again. So that's within a 10-year period, I've already been wiped out twice. At that point, I swore off markets. I said I'll never touch markets again. But then 2012, 2013 came around, got into Bitcoin, and then I was back in it again. Why is all this important? What it means is I've seen both sides of the equation. I've seen what happens when bubbles burst. I've experienced it. I've been impacted by it. I've seen what happens when people think something is a bubble and it doesn't burst, and that would be Bitcoin. Ironically enough, Bitcoin has cemented my understanding of markets because to understand Bitcoin, I had to understand markets. I had to understand fiscal policy. I had to understand monetary policy. I had to understand the historical patterns that exist with currencies. I had to teach myself all of these different things about markets so that by the time I got through my first cycle in Bitcoin, then my second one, and I went through, I mean, I can give you all kinds of examples. I mean, we have the block size war. That I don't you probably want I don't know if you were around for that, but that was a level of drama that you haven't seen yet. There were people that thought this was the end of Bitcoin
Yeah.
when that was going on. Mount Gox. I was barely in Bitcoin at the time when that happened, and I shit you not, that nearly got me out of it permanently. So I've seen these events, I've experienced these events. So now MicroStrategy to me, again, I tell people three things about strategy. For me, it is a directional bet on Bitcoin. It is a bet on the future adoption of Bitcoin, a leverage bet on the future adoption of Bitcoin, and it's a bet on market psychology. Bitcoin adoption is not going to be driven by fundamentals, it's going to be driven by narrative. People need to understand that fiat currency is designed to be debased. It's going to lose between 2 to 8% every single year, no matter what happens. You need a new monetary system to secure your future. That narrative is slowly but surely getting more traction. As that narrative gets traction, it stands to reason that the company with the most Bitcoin on their balance sheet will disproportionately benefit from that narrative shift. And the company that is most effective at leveraging their Bitcoin to bring new products to the market will see further disproportionate appreciation over time.
Right.
So that's a very long-winded answer of saying the reason why the ups and downs in strategy don't faze me as much as they used to, if at all, at this point, is because I've already done the work. When I do analysis on strategy, as we're probably going to get into in this call, I am going very, very deep into the analysis, and I'm challenging assumptions, and I'm trying to find what is making the price do what it's doing. I have the understanding of Bitcoin. I have the thorough understanding of strategy. I have the thorough understanding, in my view, of markets. All of that coalesces into a valuation framework, quote unquote, where I can say my evaluation framework, I have no shame in admitting, is forward looking.
Of course. It
I
has to
I
be.
don't have I don't have the magical metric. I don't have the magical spreadsheet that's going to give you the answers. What I do have is a thorough understanding of what's been going on, and that can help me understand of what help me understand what's coming tomorrow. But again, Notice how I'm not saying I'm predicting the future. Notice how I'm not saying, oh, I'm exactly right. I am saying I think I understand what's going on, and I'm making a bet on that, on Bitcoin, on strategy, and I'm also a Nvidia holder, Tesla holder, Palantir holder, for the very same reasons we just discussed. AI is not a narrative; it's a paradigm shift. Bitcoin is not a narrative; it is a fundamental shift in the way economies will work.
Right.
Those are the two bets that I'm making. Looking forward to the future.
Yeah, it's funny that you mentioned that you know, what your own thesis is, and that, like, I think it has to be forward looking, right? And I just look back on my original thesis behind investing in MSTR, and it's it's dramatically different now than what it was. I'll be honest with you. Like, I remember my brother told me about MSTR. I was huge into Nvidia, pretty much, you know, an AI trade guy. And then I literally found out that, like, what convertible debt was, and it's realizing, oh, this position is fundamentally long Bitcoin, short the dollar. And I remember it was really simple for me, like realizing that you can raise billions at 0% interest to conduct your own speculative attack. And then, you know, that obviously exists, but now strategy's planning to let all the converts equitize. And now it's all about digital credit. So the point that I want to make is that it's always in flux, right? Everything's always in flux. You're constantly refining your own investment thesis. And yeah, to me, it's still compelling. It's still compelling what you just said about the paradigm shift. If you believe that, you know, there's obviously the debate, and I've seen you get into this about, you know, the definitions of wanting to discuss hyper Bitcoinization, and, you know, on what timelines will a fiat system coexist with Bitcoin, et cetera. But I don't think I think that the narrative, what you just said, it's very powerful, like a paradigm shift level powerful, of the way Saylor talks about Bitcoin being a new monetary operating system. I think that he sees Bitcoin fundamentally differently than a lot of people do, and I'm I'm on board with him, and that's why I'm an investor. So I don't know if
Well,
you
the thing,
agree.
yeah, absolutely. And the thing about it is, and you brought up the point about the relationship with the fiat currency and the dollar. What people don't realize, and what the shorters of the stock don't realize, the Jim Chanoses of the world, they're trying to say they're long Bitcoin, short MSTR. And by Saylor issuing shares or whatnot, he is saying he's short MSTR. No, he is short the dollar. What he is doing is he's printing shares that are denominated in one currency, trying to get exposure in another currency. And what he's telegraphing to the market with Bitcoin per share and Bitcoin yield is, my view, is that he's saying at a future date, each share of MSTR is going to be backed by X amount of Bitcoin.
Yep.
You're going to have collateralized shares, essentially, is kind of the way I look at it. And if Bitcoin does what we think it's going to do, sure, Bitcoin per share and Bitcoin yield are always going to trend down. That's just math,
Yep.
because Bitcoin is going to be issued at a ever depreciating rate. It's going to be going up at an ever appreciating rate. There's no way that Bitcoin per share and Bitcoin yield can go up. That's
The
not a knock.
scale hurts you, that's for sure.
Yeah, that's not a knock. But when Bitcoin is at $1 million, even 0.00 whatever Bitcoin per share is going to be an appreciable amount. And I think what he's essentially doing is what everyone wants the U.S. government to do. Why don't you just print dollars and buy Bitcoin? What do you think Michael Saylor's doing?
Right.
He is printing shares to buy Bitcoin. He is not short his shares. He is short the dollar, and the shares are the medium of exchange, which he can most effectively exchange the dollars for that Bitcoin. He just can't come out and say it, because no one's going to back him up if he comes out on all these podcasts and saying the US dollar's crap, every dollar's crap, I'm trying to short the hell out of it. No, but really listen to what he's saying. The examples he's given about his past, about Argentina and all these other currency events, he is telegraphing to you he's short the dollar, but he's not saying he's short the dollar. So I
Yeah.
think that he has a very, very long-term view on this, but everyone's getting caught up in the noise that exists right now.
Right. And there's certain optical, like from an optics perspective, you can't like come out and publicly say, right? There's obvious like strategic decisions that you need to make. And I think that just because people don't see that, they're not willing to do their due diligence and thinking about what is realistic in terms of like, what is the realistic let's say, philosophy, ideology behind what the company's going to be doing. I feel that like people, they don't want to do their due diligence. And I guess I'll just frame it like this. I think a lot of the cynicism is really irrational. I think, and it was perfect example. I love on the earnings call how they came out and said, yeah, we'll sell high basis Bitcoin. This is why I asked about share buybacks. And so much of the naysayers out there are just assuming things that like, oh, well, they haven't said it. That means they'll never do it. And I think that a lot of the cynicism is pretty ridiculous. So yeah, I don't know.
And
Yeah,
the road that they're on is being built out as they drive it.
exactly. They're
This
on
is
the frontier.
yeah,
There's
this is
no
the
how-to
first.
guide here, guys.
No, this is the first company that's ever done anything like this. And this is not me knocking the other Bitcoin treasury companies. And I don't think anyone watching this will even take it as a knock. The Bitcoin treasury companies, Semler, Metaplanet, so on and so on and so on and so on and so forth, that came after Strategy, they admit they're following the Saylor playbook. And what Saylor, the challenge that people don't realize that Saylor has is that he has an idea, he has a framework that he's building out in real time. There's going to be bumps along the way. He is not going to be able to tell you or even know, yeah, what I'm doing is not working well for the first 6 months, but it's going to work really well over the next 6 years.
Yeah. It's a
There,
long-term
he
structural
can't do
bet.
it.
Yeah.
Yeah, he can't do it. That's why with this slide right here, what mNAV really measures, everyone keeps talking about mNAV, mNAV, mNAV. mNAV is sentiment. There's no lever that he's going to go into his office or into his little think tank that I'm sure he has at Strategy HQ and start pulling levers, start pushing out shares, start buying back shares, start selling Bitcoin, stop buying Bitcoin. There's nothing that he can do that's going to move mNAV. The narrative is going to move mNAV. And I'm sorry to tell anyone watching this, the narrative on Twitter is not what's moving mNAV.
Yeah,
It's not us.
it's just reality. And you've done
Yeah.
some amazing research going into that, which we'll get into. But just to finish off the slide, guys, it's very simple. Look at the formula. The price is in the numerator. So Adrian, this is the way I look at it, man. Like if the price is being multiplied by the outstanding shares, that means market cap is the price of the company. It's mind-blowing, isn't it? Like it's the price of the company. So the market cap is emergent. And
It is.
and when you're just dividing that by the net asset value, you're just choosing, you can decide to denominate it in whatever you want, right? Like this is just happens to be the net asset value. It's the price of the company. And obviously you can use market cap or enterprise value, however you want to do the calculation, but
But even there, you see, there's no consensus on how best to calculate mNAV. I do it one
exactly.
way, you do it another way, Strategy does it another way. Even in that, subjective bias and individual assumptions come into
It
how we should
leaks
even
in
calculate.
everywhere.
Yeah, how we can even calculate mNAV. Therefore, that is why when people tell me that mNAV is not sentiment, I'm just like,
Well,
it clearly is.
I know you made the point about the algos, man, but like, do you ever think about like, and I'll be honest with you, I don't totally understand how these things work, not like you do, but like, wouldn't index algorithms be reading social data and
Yes.
where does that stem from, right? It's
So,
individuals, it's sentiment.
and this is what I tell people on Twitter. I've gotten a lot of or X, and I've gotten a lot of heat for it in terms of be wary of a lot of these large accounts, what they're trying to do. A lot of the large accounts are trying to trip trading algos to create entries. Now, people think that's not possible, but in terms of how trading algorithms work, if you create a groundswell in sentiment and you try to farm that and they read on it, that can create temporary spikes, peaks, and troughs in price action. That'll create entries. And all you have to do is have your buy open at the time for it to execute. How do I know this? Because people that are far smarter than me that work at hedge funds and quant desks that design algos have told me this directly.
Yeah.
And they have said that social media has become a gold mine for three things: NLP, that's natural learning processing, general sentiment data, and trading algorithms. They have told me that if I understood the sheer level of inbounds they get from companies looking to capitalize on sentiment data, I would be shocked. And once again, it's because how do these trades, how do these algorithms execute? They are autonomous actors in the market and they need a trigger. What is the most real-time, unfiltered potential trigger you can get? It's sentiment data. And
Right.
sentiment data can be manipulated by bots because a bot can tell if it's looking at a post from a bot, which is where NLP comes in, and they're trying to get more and more skilled at deciphering what is a bot and what is not. But I've seen there's entire bot accounts on Twitter right now with 30,000 followers, and people don't believe it.
It's true.
But
I've seen them and they're obvious.
yes, they're bots.
Of course.
And or if I do any post about Bitcoin, about MSTR, about Nvidia, within a millisecond, I have 3 posts already.
Yeah,
And
and
people tell me that bots aren't running social media. It's just like, come on.
I've seen it enough times where it's very obvious to me, where you look at the followers of these accounts and it's all other bots. It's not real people. It's non-verified accounts. And the one thing that I'm kind of hung up on is that I'll see a whole bunch of views on some of these posts, and I'm honestly not seeing it as much. I actually think X cracked down on some bots recently,
They did.
which
They
has
did.
seemed, because I looked at my engagement rate on my analytics and it is down
Dropped.
considerably ever since then. And I'm like,
Yes.
was half of my engagement based on bots? Which, I mean, I think that's some evidence there.
Yeah.
But I don't know. I guess I'll just say that I really hate the FUD and I hate the idea that bots could be formulating it, because at the end of the day, like the capital raising that MSTR does, the strategy does, it is the arbitrage of the narrative. Like
Essentially.
that is exactly what it is. And I can't stand to see fake news get in my way, Adrian. I'll see a post that will have like a strategy logo made by an account with 25,000 followers. And I've seen these have like 400,000 views from an obvious bot account, like 100% obviously. And I don't know. I think it's very obvious to me. And honestly, like I said, I don't see it as much anymore. But right around the time Saylor came out and said it, that was the first time when I really thought, okay, so I'm not crazy. Like if Saylor thinks that's the case, then
Yeah,
at least
and
I'm not crazy.
people accuse them of trying to make excuses, and it's like, again, you are assuming or you're operating from a framework that assumes that he's in control. He's not.
Exactly.
And that's why understanding that mNAV is sentiment is so important, because sentiment can be manipulated.
Right.
And because sentiment can be manipulated, you have to understand that it's going to ebb, it's going to flow. There's nothing that can be done to actively manipulate it. And the caveat I give is you can create an environment where mNAV can run, but again, that is not you taking a direct action that's making it happen. That's
There's
just
no
you.
lever.
There's no lever. There's
Right.
absolutely no lever. And quite frankly, a lot of people are going to be eating their words if in 2.5 years, the very thing that lets mNAV run is digital credit.
100%. Yeah. And like, it's funny, you see that the big debate about this, about digital credit now is people debating on how to count the Bitcoin per share with the introduction of the preferred equities. And, you know, if that kind of mucks up the claim on the Bitcoin in the capital stack. And so I think that's going to actually continue to be more of a driving conversation, to be quite honest with you. I think like if we get into a next FUD cycle, I don't want to say that there's no legitimacy there either. I'm not saying that at all, because, you know, like obviously when you introduce preferred equity, that does add complexity. That's 100% true. But
You can't deny that. Anyone that
right.
says it's not, I'm just like, yeah, you're not paying attention. You've added 4 new equities on top of the common. That's going to create complexity, just
Right.
like the preferreds created complexity as well.
But
Sorry,
where
not
I
preferreds, the converts.
but where I stand on the equation is that like, and I wanted to ask you this earlier, I didn't find a good entry though, is talking about the efficient market hypothesis, especially as it relates to a brand new set of instruments. Like I don't know, this is just me. You can tell me if you think I'm crazy, but the amount of long-term MSTR investors who don't even understand the preferreds yet is astronomically high. Like people are buying people are buying the common equity, not knowing like what even Bitcoin per share is. Like, and you're telling me that the market's going to be pricing in some like vague extrapolation of how the Bitcoin per share is going to be counted amongst the capital stack of this brand new credit structure. To me, I don't know. I just don't think that that's. Obviously, it plays a part into it. Of course, some people will factor that in. But relating to the content, what we're talking about, like individual valuation, I can't begin to think that there is this intelligent, cohesive market that's all agreeing upon that, like, this is crazy and insane when the investors don't understand what they're buying. I don't know if you agree with me, but that's my piece.
I understand where you're going, and I do agree with it. And here's how I would frame it in
Yeah.
terms of how the market is perceiving strategy. I think that people are trying to over intellectualize it. They're trying to say
Exactly.
that the preferreds will do this, Bitcoin per share and Bitcoin yield are going to do this, so on and so on and so forth. If you take a look at the price action, and maybe we'll get into this on this call, the analysis that I've done, I've gone all the way back to 2020. And I can tell you by year, there are times where the DXY and liquidity and global liquidity has mattered more. There are times when the options market has mattered more. There are times where Bitcoin's volatility and direction have mattered more. There are times where Bitcoin sentiment has mattered more. And this has fluctuated on a yearly, if not quarterly basis. At no point in my initial analysis has the ATM mattered. At no point in my initial analysis has the mNAV been directionally or proportionally cohesive in establishing what a price floor or ceiling would be. Those are all effects. They are not cause. And why do I say that? Right now, I think what the investor base on X needs to accept is that we have two or maybe even three forces that are battling each other. One force is us. We think Bitcoin is the emergent asset of the world. We think it's going to be the future of finance. We think that Bitcoin is the best commodity that's ever existed, perhaps. We think that it's going to have a strong basis in the future of the world. Okay, great. There are market players that believe that, but think the MSTR is not a good vehicle for exposure to it. Therefore, they're shorting it.
Yep.
So that's one action reaction dynamic right there. Here's another. There's that, and this is becoming the more prevalent driver of price action as far as I can see it. There are people that are saying that as currently constructed, these Bitcoin treasury companies do not have a valid model. There are people that are saying they do not believe that Bitcoin derived earnings are valid. They do not believe that Bitcoin derived earnings are sustainable. They believe that there needs to be some sort of operating income that's coming into the market to justify a multiple, and therefore they are shorting in the stock and choosing to exert pressure on the stock in a way that drives the price down because they're looking to make money on the opposite end. Then we have the convertible bond holders that are still arbitraging this trade on both sides. Notice how all three of those dynamics that exist are not something that Michael Saylor has any control over. Those aren't things that we have control over. mNAV, the multiple to the net asset value, the multiple that the market is assigning, is the emergent result of those dynamics playing out at the market level, which is why I said price is set at the margin, but the multiple is set by the market. That is not something that strategy can escape from. They have no control over that. So I think that a lot of the people saying that Michael Saylor did this and Michael Saylor did that, they're missing the point, and they're looking for something to blame, and that's a very, very human drive. So I get where it's coming from. But at some point, I think you need to step back and understand what's really going on. And I think you'd be either put at ease by it or decide to sell if that's your call. Great. But to your point, I don't think most understand what's actually going on. And there are a lot of individuals that are taking advantage of that, trying to push narratives. And there are a lot of individuals that are kind of feeling lost in the lurch, and they're just, going online because that's their only medium to get out their angst about the equity itself.
Well, I think that what it comes from is that I see a lot of people trying to rationalize something, right? When you are heavily allocated to an asset that, has some negative price action, it's natural to look for explanations, of course, but I think that often the case, people do it too much. And I really think it's like, hey, maybe the majority of the market is still just not seeing what you're seeing, and you don't need to jump the shark to look for some rationalization about why the price is moving the way that it is. I think that a lot of the time, people don't even consider that possibility. And at least in my opinion, the dialogue that I'm conducting on social media and how much of the the dialogue that I see, which is quite a lot of it, I don't even see people attempting to confirm that that is something that can even be done. You know, they're not even attempting to recognize that. It's immediately like the blame game. And to
Mhm.
me, it's like, it goes back to my point earlier, really about cynicism. And I think that there is a lot of irrational cynicism about what the company can control, what Saylor can control, and they're constantly looking for explanations. And this is where I get, um, I'll just say this: the long-term alpha belongs to those who are skeptics of the storytelling. That
Yeah.
that that to me is what I think that people really need to take. If you take anything from this call, people just know that the long-term alpha is like the people that are skeptical of whatever storytelling is being told you, because that's how you ride the volatility. If you're investing on a sound thesis and you're going to do it on a 120 vol asset or a 65 vol asset, even, it's like it's being grounded in a thesis and not being like uh being held accountable to your thesis by people that are immediately looking for explanations on a 3, 6 month, 1 month, even year-long time horizon. When it's this big of a paradigm shift, I think like I don't know. To me, like, it's very obvious. I think what was driving a lot of the multiple, like last November, was an environment that was like, we had a new president coming in that was talking about a strategic Bitcoin reserve. The balance sheet was 25% convertible debt, and Bitcoin was moving up, which, according to your analysis, is the huge driver of the MSTR price itself. To me, it's like, guys, like, you drawing a line from the November all-time high and drawing it all the way down and acting like that some type of thesis is broken. To me, it just doesn't hold water. And it's weird. What I'm starting to tell people is that if you're bearish, then sell your shares, because the thesis is different. Like, sell your shares.
And
Like,
there's nothing wrong with selling your shares
not at
and
all.
coming back in at some point, or just saying it's not for you. That's fine. But again, and this is where I try to be somewhat sympathetic, but I'm not very good at it because I think it's ridiculous. If you think it's a bad investment, coming on X and screaming about it in every post you can find, what are you gaining from that?
Right.
And this is why I say people are trying to find a way to get that angst out. They're trying to emote as best as they possibly can. And X, because it's a hotbed for financial conversations, is the ideal environment. But to your point about last November, and when I did like a very truncated analysis on the data using the statistical modeling, it was hilarious. From the moment that Trump started to get traction and real traction in terms of the narrative around Bitcoin, in terms of the narrative around everything, and then he won the election, the the volatility of MSTR did like this, the volatility of Bitcoin did like this, and the price just started going
Yep.
in almost like a straight line. And for all the ATM bears out there, that was some of the heaviest ATM issuance that they ever did at that point, and the market ate it up. And why is that? Because the ATM is a function of demand; it is not driving demand. And
It's
we're going to get to that at a
it's
later
the
point as well.
narrative arbitrage, and that's what
Exactly.
and obviously we know a lot of the complaint is that he did it too fast, too much, and
The
um
reason why he did it so fast, again, and the data bears this out, is because the demand was there and he was striking while the iron was hot.
of course, like, and it's a
That's
finite
why he did
asset.
it.
You're like,
That's why he did it.
and he probably has access to asymmetric information. We've seen him in Washington D.C. He,
Mhm.
like, you have to understand that he's acting on things that he knows, not just what the average investor base knows. So, I guess I'll just sum this up, and we'll keep moving through the slides here. But I really want to touch on one thing. I obviously had the opportunity to ask a question on the earnings call, and I had a couple of people say, Adam, why didn't you ask them to address the negative sentiment? And my point was, that's not their job. Their job is to communicate the business plan. Like, people need to understand, like, what you need is shareholder alignment. Like,
Mhm.
if you don't like what the business plan is, then you can have your negative sentiment. But my point is, if you don't like where the company is going, like, somebody literally said this to me. They're like, you're bullish on the company, so you can't be objective, which is nonsense, because, like, it's very obvious that like we know as Bitcoiners that if you're going to invest in a Bitcoin equity, there's counterparty risk, there's execution risk, there's all kinds of risks that come along with this. And I'm not ignoring that. And I'm not ignoring that, like, maybe things can be efficient. Saylor himself says that we're on a journey. This is something there's no how-to guide for, right? And
Yeah,
so
exactly. Yeah.
people are saying that, why don't you address the negative sentiment? And it's like, at this point, I'm so exhausted by the whole sentiment thing. It's, guys, if you think them trying to get a portion of a $300 trillion capital pool warrants negative sentiment, then you probably shouldn't be a shareholder. Like, and I'm not trying to be mean. Like at this point, like, clearly this is a long-term structural bet on Bitcoin adoption. And I think that, like, asking about how some people might like that endeavor, I'm not interested in. I don't want to have that dialogue anymore.
Well, in addition to the conversation around strategy, this is why I think you hit the nail on the head when you said people are not really, one, understanding the equity itself, and to my point, that people aren't really understanding the market. You are an early NVIDIA investor. I don't know if you're earlier than me, it doesn't matter. I got into NVIDIA at the same time I got into strategy, 2022. At the same time, I also got heavier into Tesla, 2022. We have watched NVIDIA's market cap go from 1 to 2 to 3 to 4, now to $5 trillion. In the Mag 7, there are 2 other companies that are over $4 trillion. That right there between 3 companies represents $12 to $13 trillion. Are you trying to tell me you don't understand that maybe, just maybe, some of the juice from Bitcoin and MSTR has been taken by the AI trade that's emerging as a secular generational trade, the likes of which we've never seen?
It has to.
On
The
top
money
of that,
always has to come from somewhere. Like,
yes.
you know what I mean?
On top of that, in November 2024, how many Bitcoin treasuries were there? Oh, in November 2025, how many Bitcoin treasuries were there by that point again? Oh, the Bitcoin miners as well. The ones that I tried to tell people about, and this is where I'm going to sound like I say I told you so, but I really did tell you so. I had posts in 2024 saying that if there's a year where Bitcoin miners will outperform MicroStrategy or strategy, it'll be 2025. Lo and behold, Iron, Cypher, TeraWolf, they've all, Hut 8, they've all been outperforming MicroStrategy. Why? Because they are now AI trades.
Yep. Yeah.
The secular movement of AI, the secular trade, the paradigm shift that is AI that's going on right now has quite literally sucked the capital entirely out of Bitcoin and the leveraged Bitcoin equities, and has been doing so systematically on a month-by-month basis all year. And I see it happening real time in the data. I'm watching NVIDIA and all the Bitcoin miners do like this, and I'm watching strategy do like this, almost in a direct proportion in the price. You need to really sit back and understand what's going on here. It's not Saylor.
Yeah.
It's not Dylan LeClaire.
It's almost like the narratives matter, right?
Yes.
The story matters.
It absolutely 100% does. And I think that's very hard for people to reconcile, because they want to think that they have this insight and they read the market right, and so on and so on and so forth. But reading the market isn't being right. Reading the market is riding the trend.
Yep.
Those are 2 different things. You could be wrong on something, but still be right on the trend.
Yeah. And on top of everything you said, Adrian, like, you have to keep in mind, just obviously there's IBIT. Like, how many like Bitcoin derivative investment vehicles have come out this year, right? And there's been like kind of an explosion in ways that you can get. And actually, Saylor alluded to this on the earnings call. He talked about, all the British investors who were investing in MSTR just because that was the only way that you could get Bitcoin exposure. And so you're like, on top of all those other factors that you just listed, it's like, and what I've been telling people is that, hey, if you don't want a leveraged bet on Bitcoin right now, if you can go get more leverage somewhere else, you can do that. Now it's not the only game in town to be able to do that. So I think all those factors are playing into the price as well, or the mNAV specifically, the mNAV trend line.
Yeah, and it's crazy to watch it happen sometimes on Twitter, and I do feel for people because on some level, because a lot of us, what are we doing right now? We are trying to get financial freedom. We're trying to get financial independence. And people sometimes like criticize me for saying, I told you so. But the reason why I do that is because I've had to swallow a lot of my pride in realizing that I've been wrong on the way I thought Bitcoin was going to play out
Yep.
in a lot of the last year, right? I thought that the narrative of liquidity, the narrative of the Fed printing, the narrative of the gold Bitcoin relationship, all of the things that have shown truth in the past have not been as true this year. With strategy, I've been very bullish on strategy. I still am very bullish on strategy. But as you can see, that bullishness has run up against the wall in the sense of some of the price action that we've seen this year. That doesn't mean that it's a bad investment. That just means that your time horizon needs to be appropriate. And I
100%.
mentioned, and I mentioned Tesla and Nvidia and all these other companies, not to say that I'm right, but to say that what made those right? Was it because I sat down and I looked at the PE ratios and the EBITDA and all this other stuff? No, it's because AI is the trend and all companies are benefiting from that. For instance, if strategy right now were to come out and say that they are doing a partnership with a few small companies that are designing LLMs that are looking to integrate into business analytics and so on and so on and so forth. What do you think that's going to do? That's going to create some new buzz, right? Now, the reason why I bring that up is, do you think strategy will actually need to deliver on that before the price reacts? Probably not.
Right.
But why aren't they doing that? I think it's because they want to deliver.
Yeah.
They don't want froth. They want sustainable growth, and sustainable growth requires periods of pain. And I think that's what they're doing right now.
Yeah, it's funny that you when we're talking about narrative, right? And it's just looking back in my own personal investing career, my biggest ever investing wins have always come from not doing what you just said, comparing PE ratios, discounted cash flows, whatever valuation metrics you can think of. But I remember my first ever big investing win was right after the COVID crash in 2020. I watched Uber lose 80% of its value. And I thought, okay, this is clearly the market being irrational. I was like, I don't believe that this company is automatically worth 1/5 of what it was because of some virus that we don't know what's going to happen with yet. I thought like clearly like this is a narrative that doesn't make sense. It's narrative arbitrage. And that's when I took out leverage and bought Uber stock in 2020 and it paid off great. So, and just like with Nvidia, it's not even a matter of looking at metrics. Obviously, I'm not saying those things can't ever be helpful, not in the slightest, but it's really you're making long-term structural bets on narratives, and that's always what has led to my success. And
And with MSTR, that's why I say it's a directional bet on Bitcoin. It's a directional bet on how they can leverage the Bitcoin, and it's a directional bet on adoption and market psychology.
right, and when people are telling me like, Adam, you can't be objective because you're not willing to be bearish, but I'm like, I'm a Bitcoin maximalist. I like this is the thesis behind the trade. Like, sorry if I can't be negative on that, Like if I intend to hold this equity for 40 more years, you can't tell me that like that's irrational. Like if my precondition is that I believe that Bitcoin's the future. So I
And that's
try.
a narrative, right?
Yeah,
And that's a narrative that you believe in, and that's a narrative that we both think is going to win. That
right.
doesn't make it wrong. We are just making a bet on that narrative. Therefore, this near-term price activity, it's not that you're not bearish, it's that you're just saying, okay, prices are cooperating.
Yeah. And
Let's
I
give it a few more years.
and I tell people this, and it's almost they don't even believe me, but this might come across terribly, but it's true. Like, I almost don't care at all about the daily price action. If I'm being honest, like, I really pretty rarely check the price of my investments. Like, and obviously there's traders out there, but at the end of the day, I'm very aware that I'm sitting on a hyper volatile asset. Like that is a long-term structural bet. What good is it going to do me looking at the price? And I always find out what it's trading at just because of people complaining on Twitter anyway. So it's just I barely even look at it.
And yeah, for me, I'm similar. The only difference is because I do weekly and monthly options, I do watch price to maintain, my
Right.
positions just to see if I need to roll out of something.
Of course.
But even still, this is what Hermes Lux talks about, the 10 delta or 4 out of the money cover call strategy, whichever phraseology you want to use.
Right.
I do it in such a way that it's relatively set it and forget it. That even if it gets to a point where my shares get called away, I'm up so much and I've gotten a premium, it's not a loss.
Yeah.
So, but even then, I find myself checking the price too much, and even I've noticed that when that happens, I start to get caught up in narratives more because it starts to mess with your head. That's why I say you need to have a framework, you need to have an understanding of what the market is doing, and you need to kind of just step back and say, I hate to use this analogy. I've put whatever chips I have in the middle of the table on this for this period of time, and I'm letting it ride. And find entries, find opportunities for buying. Like I bought on the recent dips, but yeah, hampering like getting hampered down in the price. I don't think it's good for people that have a long-term time horizon. If you're a trader, do you?
Right.
But for someone like yourself, someone like me that has a longer-term horizon, it doesn't do much good.
Right. And that brings us to this middle part of the slide here. I want to show everybody the Dylan LeClaire quote here, which is playing exactly what we're talking about. An operating company cannot control its share price. There isn't a joystick to simply pull. We call it a lever. The MetaPlanet team thinks it's a joystick. And this specifically, MSTR didn't ATM a single share for weeks after Q2 earnings. And in BTC terms, MSTR still went down. There are countless variables behind markets trade day to day. And that's a director of Bitcoin strategy agreeing with us that it's not a lever in your house, guys. Let it breathe, right? And this brings me to my example right here. On October 10th, MetaPlanet put out this notice that they were going to suspend the exercise of their 20th to 22nd series of their stock acquisition rights. So essentially, hey guys, they're going to stop issuing equity right now because it's not accretive to the shareholders. And then obviously it's just one example, short time horizon, of course, but hey, we're letting the mNAV run, guys. And look what happened. The MetaPlanet share price just goes down. So in my opinion, when you're letting the mNAV run, you're signaling to the market that the flywheel doesn't work.
Yep.
And that is what you want to avoid.
And I think you just had the post up where I talked about that.
Yeah, I think that was a couple back here.
Yep, that one. So the flywheel's reflexive. Stopping the flywheel becomes recursive because we have to think to ourselves, what is the market assigning a premium for? And I know there are probably going to be people in the comments that are saying, well, they're assigning it on future expectations of Bitcoin yields. Sure, let's say that.
It can be a number of things.
Yeah, they're assigning multiple based on accretion in Bitcoin per share. They're doing whatever. No, this is where I'm going to sound like I'm saying the only thing that matters is price, but that's not what I'm saying. The market is saying we are willing to assign a premium because we think the share price will be higher tomorrow. And the market is also saying we want to discount the share price because we don't think it should be higher tomorrow. Those are the two use cases, conditions that we can distill this all down to. One, some people think it's going to go up, some people think it's going to go down. And why does stopping the issuance of shares to buy Bitcoin break the flywheel? It's because what have you been saying to the market this entire time if you're a Bitcoin treasury company? We want to acquire Bitcoin because Bitcoin is a supreme asset. Bitcoin is going to go up in value. We can leverage Bitcoin in a variety of ways. You stop doing that, you've essentially told the market that your whole model is flawed.
Yeah, exactly. And I'm trying to see if I can share something here because this is kind of funny. At least I think it's funny. I shared this little meme here just about the market's reaction. Like the market's rewarding MetaPlanet with a multiple, right? Like to me, that's saying like, hey, give us the asymmetric Bitcoin exposure and your aggressive accumulation. And then they do just that. And then the market's confused right now with the confused Pikachu face. And obviously, to me, that's like, hey, they did exactly what I wanted them to do. Like literally exactly what I wanted. And then on the whole way down to the MetaPlanet stock price, you have people debating, once it hits 4.32 mNAV, even at 2 mNAV, they're like, stop the equity issuance, stop it, like let the mNAV breathe. And the whole time I'm like, no, like it's 100% premium. Don't you dare stop it. And like it's
The
tremendously
challenge, yeah,
accretive still. Yeah, go ahead,
the
Adrian.
challenge with it, and this, I understand the impetus that people have for saying let mNAV run, let it breathe, whatever. However, when it comes to strategy, it is a leverage play on Bitcoin, it's a beta play to Bitcoin, so on and so forth. I think what people fail to realize, and this is just my opinion, and I don't even know if you would agree with it, I don't view the other Bitcoin treasury companies as beta plays or leverage plays of Bitcoin. I view them as beta plays to strategy.
So far, that's been the case, undeniably, I think.
And the reason why these companies saw disproportionate run-ups in market cap, and this is where I'm going to piss a few people off, and I don't say this as a knock. People saw what happened with strategy in November 2024. They saw these companies had smaller market caps. They saw these companies had smaller footprints, and the opportunity to drive the price up disproportionately to high as a multiple to its net asset value presented itself. And I think you had a lot of people go in, push the price up. Initial Bitcoin per share was high, initial Bitcoin yield was high. But once that trade stopped or other things became more attractive, they rotated out. And that is why you're seeing the depreciation in the mNAVs. They are beta plays to strategy, and strategy is a beta play to Bitcoin. And you've gone further out on the risk curve. Now, that is not me saying Metaplanet's bad. It's not.
Of course not.
That's not me saying something like Smarter Web or whatever else is bad. That's not what I'm saying. You have to understand what the market did. The market saw these as beta plays to strategy. They became the new alt season, Bitcoin treasury season, whatever phrase you want to use. And that's why the price ran up. The companies that were effectively able to leverage that, which I think Metaplanet did, because they've got over, what is it, 30,000 Bitcoin now over?
Yeah.
And that is a significant war chest of Bitcoin. Now, it's not as high as strategies, of course, but in a market like Japan, they can bring all kinds of new offerings to the market. They can maybe find ways to generate yield in a Japanese market. They can do all kinds of things that can help them survive. But the mNAV dropping down had nothing to do with the issuance of shares and everything to do with what the market was telling you. And that's why I want to keep hammering the point. Price is set at the margin, but the multiple is set by the market. The market drove the price up because it saw an opportunity to have disproportionate returns in the form of a multiple. Now that has depreciated. Now that has decreased. That does not mean that Dylan and Simon were using the joystick and screwing with your equity. It just means that they got the run up, they capitalized on it. They've got 30,000 some odd Bitcoin right now. Now, what are they going to do with it? That's what's going to determine the multiple going forward.
And I'm happy that you brought this up, Adrian, because we had a really good conversation around this. And I want to talk a bit about it because I'm going to be honest, man, like you kind of took me out of my own bubble a little bit. Everybody knows, like, I'm a big Bitcoin treasury guy. I'm on X, YouTube all the time. And you said something that was you kind of illuminating where I was like, man, maybe I just need to go take a vacation. Maybe I need to, like, I was expressing to you the frustration of seeing, you know, if there's any Bitcoin treasury company that's trading at a discount to its net assets, to me, I'm asking the question, is the market treating their Bitcoin treasury strategy as a liability? Like, I find that bizarre, but then I realize, oh, but the market as a broad thing is a lot bigger than the echo chamber that I'm in. And so I really realized, hold on, like Sequans, for example, if it's trading at a 0.8x mNAV with a profitable operating business, why doesn't this get, like, you know, the PE, high PE treatment that an operating company would, right? And I couldn't square this in my head. And you simply said, well, maybe the market's viewing Bitcoin as a liability. And like, I think that, like, that can be that this can be inserted into what you just said, right? About maybe some of the rationalization behind why we've just seen this huge mNAV suppress. And it's just like on the macro scale, like we just saw it with the credit rating, you know, the illogical credit rating that they got where, you know, Bitcoin is viewed as a liability and it's just not going to invite a lot of capital beyond, you know, a few hundred people on Twitter, maybe.
Well, so the thing about it is that Yes, and I did a post about this today with regards to the S&P 500 inclusion. Um, the Bitcoin, in terms of the S&P 500 inclusion, is a liability. They're not going to count the Bitcoin towards the equity basis of the company. That's not, and that's not. And I think it was BTC Overflow that brought this point up, and I found it myself. But he really made a very succinct, eloquent post about it. The S&P 500 and the rules that they operate under are not going to allow the Bitcoin, as the rules currently state, to be counted towards the company's overall valuation. So essentially, it is a liability by definition,
Yeah, by their
and
yeah, of course, by their
by their
methodology.
framework. Yes, by their methodology, and they're going to have to change it in order to allow that to be viewed as not as a liability. On top of that, one of the things that I tell people is that, and I've been hammering the point that the market is telling us that they don't value the Bitcoin treasury model. That's not me saying that the Bitcoin treasury model isn't good. That's me saying, look at the market. The traditional finance market is not going to just allow Bitcoin to Trojan horse its way into it and get Bitcoin all this passive exposure in the form of the S&P 500. Because what does that say? Bringing strategy into the S&P 500 says the few things. One, Bitcoin derived earnings are legitimate. Two, if you are a company that's on the fringes of S&P 500 inclusion, adding Bitcoin to the balance sheet will allow you to, I don't want to say juice your earnings, but it would allow you to increase your earnings that may put you over the finish line and make you eligible for S&P 500 inclusion. And it legitimizes Bitcoin in a way that the Bitcoin treasuries and the ETFs don't. Bringing strategy in my view, says to the entire world, Bitcoin on your balance sheet as an asset is not only accretive, it is extremely beneficial for you to consider adding Bitcoin to your balance sheet and getting exposure to Bitcoin because of what it's done for this company strategy.
It's the ultimate stamp of approval. How many publicly traded
Exactly.
companies are there that want to be a member of the S&P? Like, what you have to think about is,
Exactly.
what is the signal behind it, right? Like that is the paradigm shift that we're all excited for, but it does go back to using that methodology. And one of the questions that I did want to kind of phrase to Fong and Sailor was based around, okay, how much are you guys going to navigate operating within a traditional credit framework versus advocating for something that to Bitcoiners would make more logical sense? Like, from a solvency perspective, it's very obvious that strategy is more solvent than Hertz and Chuck E. Cheese.
Yeah.
And so I wanted to ask them kind of something about that. And they kind of talked about it a little bit, though, where, you know, they are acknowledging what the S&P Global is telling them, that they plan to let the converts equitize, you know, and eventually, you know, you make points about the BI business where you can see, you know, improved USD liquidity, improved operating cash flows, maybe. Like, I think that, like, they're in a very tough spot where you have to straddle the line. Like, you're competing with the old system while
Wanting
also
to be
trying
part
to
of it.
embrace it, right? And it's a
Yeah.
difficult thing.
And with the point on the BI business, the thing about it is that, and I've been saying this for over a year now, they don't need to become Microsoft or Palantir or whomever in terms of business analytics. If they take a portion of the equity, if they had taken, and this is not me armchair quarterbacking, if they had taken a portion of the money that they've raised to buy Bitcoin and they had invested it back into the BI business to do some recruiting, to scale it out, or if they do it in the future, I really think the market will reward them with a higher multiple, because the BI business itself, scaling in tandem with the Bitcoin treasury model, it removes that immediate stigma that I think the S&P 500 will view as a stigma of fully legitimizing a Bitcoin treasury model.
Right?
If
It's
they are
taking away an
bringing
attack vector, you know, just
exactly,
getting rid of it.
exactly, it is an attack vector, and I think the attack vector for S&P 500 inclusion and for higher multiples, ironically enough, near term is the BI business. Now, people can say, "Well, have a longer term view. Bitcoin is the end goal, so on and so forth." Okay, this is the counterpoint I would bring to that, and this is something that I've said, and I think we have it on a later slide that we can get to. If the BI business is not going to scale, Or if the plan is not to scale the BI business, then they should abandon it right now.
Yeah.
Right, that slide right there.
Yep.
And they should do a hard pivot and evolve into Bitcoin native financial services. That'll involve everything from maybe providing liquidity to Lightning Network to generating yield on the Bitcoin. They, which is point 1 and 2 there. They can scale the legacy operations with convert proceeds, so do a debt-fueled build out of the BI business. That's one of the paths I'm thinking through. Or the way I think they should do is a big bang hybrid. Do a blend of all of it.
Yeah.
Because think of it this way. Just imagine a future where Strategy is one of the largest companies in the world, and they've done a few things. Look at strategy.com. That analytics board is a level of transparency that no company has.
It's the
So
homepage, you guys.
exactly. They establish a new framework for operational and company transparency with strategy.com. That's very, very business analytics focused. That's very, very BI legacy coming through in the Bitcoin strategy. Now flesh that out to say, what if one day they have analytics about their yield generating activities, the amount of Bitcoin they've committed to yield generating activities, the clients that they have, the wallets that they have with those clients. Do you see where I'm going with this? They have a
Yep.
level of transparency that they can bring to the market that will give a view into their operations that no other company in the world would provide. Then on top of that, the BI business is scaling out. They go into new system implementations, integration design, AI onboarding. They don't have to target companies the size of NVIDIA. They can target companies the size of the companies that I work with. 10,000 and fewer employees, 5,000 and fewer employees, helping them onboard, helping them get new systems onboarded. They have verticals that they can take advantage of that I truly believe will help them. And this is where I'm going to sound super bullish, blindside traditional finance. Because if they scale the BI business, if they get inclusion into S&P 500, credit rating for those preferreds are going to come in short order.
100%.
And where I will sound bearish is that I think rating for the preferreds comes after S&P 500 inclusion.
Really? You think so?
I think it's possible.
Yeah.
Now that's not a negative.
No, of course
That's
not. But
just
it's
that's
a
it's a
precedent that has
reality.
to be set, right?
Yes. And just but we really need to flesh out what it means for the S&P 500 to include strategy. Me saying like people are giving me a lot of shit for saying that I think it's at 0% this year. That's not me being bearish. That's just me talking about everything that we're talking about right here.
You're just going off what they say and what their
Exactly.
methodology is. It's not a negative, it's an objective.
Exactly.
And it's an
Yeah.
objective opinion.
Including strategy into the S&P 500 will legitimize Bitcoin in a way that people are drastically underappreciating. At that point, it makes sense for Meta, for NVIDIA, to just say, you know what, we'll throw a few hundred million at Bitcoin.
Yeah.
Just to have it on the balance sheet. Why? It is a very clean box that can exist in their operating cash flow that the S&P 500 recognizes, that the market recognizes, that will create no static in terms of how their equity is perceived.
Right.
Right now, for them to do that, it's a big headache for them. After inclusion, I think the floodgates open. And we don't need another company to become the next strategy. We just need 1,000 companies to have a few thousand Bitcoin.
Yeah, talking about the strategic responses, I mean, you gave some bull fuel. This is mine, and this is why I still love the equity. And it's one of many reasons is because obviously we see the mNAV trending toward 1.2, 1.1. It's getting closer to 1. That seems to be the trend. But what that's telling me is that, that's number one, that's the market discounting any ability to just use capital markets tools to increase their Bitcoin stack. But that's also totally ignoring the massive amount of optionality that you have when you have $70+ billion of Bitcoin. Like,
Yes.
you're saying like, this big bang hybrid blend all three paths. And it kind of relates back to what I said earlier about like the cynicism. It's like, why are you people assuming that they could never pivot and do something else with their Bitcoin, make it more of a profitable enterprise, get more cash flows? Like, as individuals, as Bitcoiners, buying more Bitcoin means that you buy more sovereignty, you buy more freedom, and they're just doing that at the corporate scale. And to me, it's like, if the market really wants to price that as a negative of what they're already holding, I mean, to me, that is like a very clear mispricing. And that's just my opinion. But to ignore, that'd be like, I don't want to make an analog to Berkshire Hathaway, but I'm just thinking of any big, like a big holding company that doesn't have a specific business. It might have to be a hypothetical company, but to value like a company with $300 billion of cash as just the value of the cash, I don't necessarily think that makes sense. I don't know. I think that optionality needs to be perceived as valuable.
And this is why sentiment and narrative is so important, that people might hate hearing about it, but we have to keep bringing it up. You just brought up the perfect example. And this is why it requires a conceptual shift and a narrative shift. Berkshire has, and I just saw the post on Twitter, I'm pretty sure you saw the same one. Buffett's sitting on what, like almost 400 billion in cash right now, 300 billion, whatever
I think it's
number
330 or so. Yeah.
Yeah, some crazy number like that, right?
Mhm.
The market's not penalizing him for that.
Right.
The market is essentially penalizing Strategy for having $70 billion of Bitcoin. Why? Because of the way Bitcoin is viewed. And that is why inclusion in the S&P 500 would be such a paradigm shift. That puts, and again, I'm not trying to sound sensationalist here, but really listen to what I'm saying here. That puts Bitcoin as a commodity, as a money, as an asset on equal footing of consideration with the US dollar.
Yeah. That moment is the big enchilada. That is like the turning point,
That's what it does. Now, really think about what that means in terms of broader considerations, whether they be geopolitical, whether they be economic. You have now said this currency that was memed into existence by some genius somewhere or a group of geniuses somewhere has scaled to such a level that you put it on equal footing with other commodities and and other assets. So other commodities, other assets, and other currencies. You've put it on equal footing. It is not on equal footing right now. No
Yeah.
matter what Bitcoiners want to say, it is not. BlackRock having the ETF did not put it on equal footing. That made it relevant.
Yeah. It's
What
a process.
what putting it in the SP 500 would do is make it important. And I've said this in the past that Strategy is trying to find a balance between two realities: systemic relevance and systemic importance. Right now, they've made Bitcoin systemically relevant with the entire economy that's being built around it. That's MISTY, that's IMIS, that's MSTU, that's MSTX, that's OwnB, that's all of the ETFs and the leverage plays and the other Bitcoin treasury companies that now, whether they want to admit it or not, are part of a broader strategic Bitcoin economy. That's systemic relevance. Systemic importance is you have now put Bitcoin smack dab in the center of traditional finance in the S&P 500. And every single investor that owns SPY is getting passive exposure to Bitcoin. All of them.
Yeah. Yep.
You are now saying that
Kind of a big deal.
Bitcoin, yes, you're now saying that Bitcoin as a currency, as a commodity, is regarded with equal footing with the US dollar, with the yen, with the euro, with everything. That is what it says. That's a big move that I don't think they're ready for yet.
I would agree with you.
But Fong and Saylor have been. Fong said this to me in the interview that I did with him, and Saylor was alluding to this on many calls and many interviews lately. They're talking about bank custody coming for Bitcoin. So here's a path that I think can happen. The market's going to do what it's going to do. Bitcoin might range at 100K for the next 6 months, for all we know. The order of events I see could happen: bank custody for Bitcoin. And when I say bank custody, I'm talking Wells Fargo, Citi, Chase, bank custody for Bitcoin. Lending for retail investors and for institutional investors with Bitcoin through the big banks. S&P 500 inclusion, Valhalla.
If there's companies that are already in the S&P utilizing incredible cash balances to allocate a bit of Bitcoin, or even if they're accepting it as collateral, like that's why the JP Morgan announcement, I feel like everybody's kind of even sleeping on a little bit. Like the fact that they're saying, yeah, we're going to test this idea. And they specifically said for institutions, but at the end of the day, those are the people with money. And, if it's good enough for the institutions, then I think that that's really just the first domino to fall. I really do. I couldn't agree more, man. I think that S&P inclusion, to me, it's inevitable because I believe Bitcoin is inevitable, and it's interesting to see what timing it will be. I definitely don't think it's going to happen this year. I don't think that's the case, and I base a lot of my thoughts on how Bitcoin is viewed in the current regime, right? Like risk off
Mhm.
versus risk on. You've seen this
Yeah,
this crazy
yeah,
gold run up, and what if this this whole market perception of the regime that we're in, what if it continues until December? It just, that as much as I want to be the giga bull that I am, it just doesn't seem the timing is quite right for like a Bitcoin sign off. I don't know. That's just
no,
what I'm thinking.
there are, in my narrow, I don't want to say narrow view, because I'm trying to look at this as a Bitcoiner, then I'm trying to look at it in a broader, with a broader lens. I think that you just kind of hit the nail on the head. That would be too much of a tectonic shift in how the market perceives it, and it's too much of a tectonic shift in regime changes for it to happen before the end of this year.
Yeah.
We've got too many things going on, and people need to understand that if they think the S&P is making decisions without thinking about political ramifications, I have a bridge to sell you.
Yeah.
There's no way that they're thinking, yeah, we're just going to go ahead and do this. We're going to just go ahead and wait for rules to change, and we're just going to, pull the trigger and put strategy in. That's not how these things happen. Not for something that represents a entirely new asset class getting into the largest index on the planet. And people have mentioned that, well, there's other companies that hold Bitcoin that are in S&P. Yeah, Coinbase being in the S&P or Block or whoever, that is not the same as getting Bitcoin the stamp of approval to be on corporate balance sheets. The companies like Tesla, or who else? Who else we have? We have Block, I believe.
Blocks in
Uh,
there, Coinbase,
yeah,
those three.
Coinbase. Yeah, those
Robinhood.
companies.
Robinhood's in there.
Yep, right. Robinhood, all those companies, they have Bitcoin on the balance sheet. I believe. I don't think Robinhood has Bitcoin on the balance sheet, but they
Yeah,
allow
sure. Maybe they
Bitcoin.
don't. Yeah, I could be wrong about
Yeah,
that.
I can't remember, to be honest with you, at this point. But they have Bitcoin on the balance sheet as a secondary to their business. It is not the business.
Right.
For strategy, Bitcoin is the business, and it would require a fundamental shift in how businesses are viewed to allow that.
This is the thing though. Like if we're being clear, they do have their software business. So it leads to the question, how big, how much of the narrative dominance does the operating business need to be before like at least an acknowledgement, you know what I mean? Like like it sucks, but it is true. Like, hey, there is an operating business here. Like, does the market have to see that it's some level of profitable? Does it have to see that it reaches X amount of I don't know of earnings? It's very tough to ask to answer that, right? Because I don't know. Does it have to be
It's
as big as a traditional S&P operating business? And like, there's
yeah.
so many things that go into that equation. There's so many different variables that the committee has to decide upon. It just seems like it'd be a lot right now for them to all be aligned and give the go ahead.
Yeah. So with regards to the BI business, and this is why I honestly think that that is their opportunity to really catch the market with their pants down. Markets are forward looking. If they were to allocate a certain percentage of future ATMs, future capital raises for additional preferreds, ATMs on the preferreds, what have you, to the legacy business, and get some high end recruits, get some high end scaling out, signal to the market that they're going to build it out, build out the platform, because they have Mosaic, they have all these other things, like really make a push, and they stick with it. That, to me, again, does not require them to have to scale it 10x. They
Yeah.
just think of it from a very, very basic standpoint. The mNAV of strategy just last year got over 4. All the way back in 22 and 23, it got over 6. Right now, it's at 1.2, 1.3, whatever it is. If they can get to a point where they maintain an mNAV of 2 to 2.5 or 3, based on the fact that the software business is scaling, and they've taken the 12 to 18 to 24 months to really build it out, and the market's reacting to that.
You get ready for some Bitcoin buys.
Yes, and at that point, this is where I'm not going to say it's a criticism, but this is the one caveat that I have. And I'm going to come back to what I said previously. If they're not going to scale the BI business, they should just abandon it right here, right now.
Yeah.
But I don't think, I don't believe, and I don't think that's what they want to do. In my conversations with Fong, in the conversations I've heard from Saylor, the BI business is going to be part and parcel of their future going forward. As such, they got to do something with it, because I think the market's waiting for what's next. The market has essentially told us, okay, great. The levered Bitcoin play, that was great in the last few years. Okay, we've seen the other treasury companies, that's great. But what are you going to do now? What are you going to do with that Bitcoin to generate operating cash flow? And I think strategy, quite frankly, has a few levers, and I hate using that term lever, but that they can pull to generate that income. They can generate yield on a Bitcoin. They can, because that will change the volatility profile, and Bitcoiners are probably screaming, "Don't risk the Bitcoin." Da 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 da. Well, the whole point of the equity and the reason why we saw that disproportionate multiple in the past was because of perceived risk.
Yeah, a lot of people like that.
Yes, you
They
have to
flood into it
crank.
for that reason.
Precisely. You have to crank the perceived risk on the equity. You have to change the equity profile of MSTR. That will juice the multiple in terms of market perception and in terms of people willing to pay a premium today for outperformance tomorrow. You can get exposure to that cohort of the market. You will get exposure to another cohort of the market in terms of the people that are looking at analytics and AI and so on and so forth. Even if the market crashes tomorrow, the genie's out of the bottle on AI. It's not going anywhere. Position yourself for the next 2 to 3 to 5 years where you can say that you are a BI company that is building out with AI in mind, which they are already doing, mind you.
Yeah, scale it.
But put some money into it. Throw some money into it. A Super Bowl commercial, something.
Yeah.
Something that will allow the market to see strategy and to see what they can do with the BI business. All of that will shift the narrative more than them stopping the ATM or doing something that's going to magically make mNAV run, right?
Yeah.
They have to create that environment that I talked about that will attract attention, and then attention will take over.
Yeah, I made a post about a stretch Super Bowl ad, and I
Oh,
know
was that you? Because I got it from somewhere, so maybe
that
that
was
wasn't
me.
you.
And I just thought, if the company's sitting on over 100 years of dividends, and your confidence in like a 10% checking account, savings account equivalent of stretch, that is like, you can't tell me that everybody doesn't want a 10% yielding savings checking account, money market account, right? And I think, like, I have a couple of thoughts. It's like, Saylor, a decent idea is like, if you're really coming to the market and saying that you want to bet like on a Bitcoin CAGR, and like you want to really demonstrate how serious you are, like, come out with like some structured yield system where you're going to pay a 14% yield. You're going to pay, and it's like, it goes down, pay 30%. Like, my point is, like, how high do the yields need to be? And you can make them high because of the safety buffer. So you have, like, I think that you have more optionality with even making the products higher yielding. I believe that's reality. I think that, like, there's enough embedded safety there. And, I can get into more detail about that because I do acknowledge there's nuance to the critics who would disagree with me. But, like, there's the Super Bowl ad thing where it's like, guys, like, a marketing push on these incredibly transformative products for people who are trapped in like traditional personal finance advice, where you park your money. I think that, like, we should be seeing more of that. And this plays back into the amount of optionality that they have when they have $70+ billion of Bitcoin net asset value. And, you just made an amazing little speech there on their BI business, the potentiality of that. At the end of the day, it's frustrating for me to see that latent optionality And I really want to see them. I really want to see them act on the capital that they have. You know what I mean? I want to see some offense with some businesses.
Yeah, and so with regards to what you said about the yields, can they do that? Sure, but the and like the caveats that you mentioned, the one thing I would say is I think they are more better served right now, showing stability and scalability with the prefers that they have,
Sure.
bringing those into other markets because let's just talk about it for what it is. They're paying the dividends on the preferreds through issuing shares, right? The market can very likely start to penalize them for that.
And plus, if you announce a 14%, I suppose the perceived risk of that is just inviting a lot of potentially negative attention, I'd imagine.
Right.
I'm just saying, like, they got a lot of money.
Yeah, and because again, this is not me saying it's a bad idea. What this is me saying is, you and I think that's a no-brainer because we are coming at it from a Bitcoin lens. The
Right.
market is not.
Exactly.
And what I'm trying to get at is they've been talking the Bitcoin language, and we love them for it. Now they need to talk the market language.
Hmm.
The market wants to see operating cash flow, free cash flow, money being generated at a clip that's higher than what they've already done. Because this is not me, again, this is not me being bearish. As Bitcoiners, you, me, the people watching, the people that are investing, we're not wrong, we're just early. We know where this thing is going to go.
Right.
However, the market doesn't care. The market may be forward looking, but the market is not full of Bitcoiners. The market is
Can't
full of
care if you
TradFi.
don't know. Exactly.
Precisely. The market is filled with either people that don't know, don't care, or are not enamored enough with Bitcoin and its potential. So I think their move is to push into the TradFi narrative in terms of what they can do in terms of operating cash flow, generating yield, scaling the BI business. I think that's all coming. But again, you're not going to get all the gains without having to go through the pain. And I think that's what we're seeing right now.
Yeah. Agreed. Uh, Adrian, thanks for the conversation, man. This has been amazing. I want to get into the chart that we have on the screen right now and
Sure.
maybe if you want to save it for a second stream, man, it's up to you because we
No, we can
haven't
get
even
into it.
talked about the ATM. It was so it's just
Oh
like
God, yeah,
it's
that's
just
right.
like
Yeah, yeah, yeah.
I think that we're at the tail end of our stream here, and I think that we definitely have to do another one to talk more about the ATM because that
Yeah.
is the second half of the juicy topics that we wanted to talk about. So if you want to go ahead and explain to people the analysis that you've been doing and take it from there, that'd be awesome, man.
Sure. So there are two primary analyses, well, three that I've been doing. This is one of them. This is the rolling volatility ratio and a beta and R2 snapshot for MSTR. So what does that mean? If you take a look at the upper left, upper right hand corner that says sample fit, the beta is saying that for every $1 of movement in Bitcoin, strategy is moving 1.33. That's the beta relationship, and this is going back to the data that started the beginning of this year, which I believe is 1/21/2025, all the way through to 10/10/2025. That was the last time I ran this analysis.
Sure.
It's also saying that the correlation, the p, the rho is 0.69. So what that means is it's about the relationship and the linear movement between Bitcoin and MSTR is about 70%. And
Which is
then the R,
significant.
which is significant,
Yeah.
yes. And so those watching will get into more detail about what all this means after I just give this quick explainer.
Yep.
And the R2, what that is saying is how much of Bitcoin's price, how much of MSTR's price activity can be explained by Bitcoin over this sample set, over this period. And it's about 0.47 or 50%. Now, what is this analysis showing? The top chart. What is this analysis showing? It is saying that to understand how an equity moves, you have to do analysis on what the actors on the price are. Therefore, MSTR being a leveraged bet to Bitcoin, you need to do a lot of analysis on Bitcoin and Bitcoin's movements at different prices, at different time frames, at different intervals, to understand how that is impacting strategy's price movement. Notice how none of this says it is predictive. This is talking
Right.
about linear relationships. And all a linear relationship means is that Bitcoin is moving and MSTR is moving and how much it moves in parallel and the ebb and flow between those two. Now, what does this mean from a statistical standpoint? Very, very plainly, people that are saying it's the ATM, just take a look. With a single data point, I've explained or can explain 70% of linear movement and almost 50% of price action with a single data point, Bitcoin.
So restate that for the audience because the ATM people, there's a lot of them out there. Adrian,
Yes.
restate that last sentence again because this is the crux of the issue. What is driving the MSTR price? We've talked nothing about price this whole time, right? So what's driving it?
The market's perception about Bitcoin, Bitcoin's volatility, implied volatility on Bitcoin now through the ETFs, and the directional relationship that exists between all three that manifests itself in price is what's driving MSTR price action up to 50% of it. Now, I want to be very, very clear. I have another chart that's far more detailed than this. This chart, the top one, is showing a univariate relationship. So if you want to go back to the other one real quick.
Yeah, sorry, Adrian. I
Oh, no
really want
problem.
you to talk about this one too.
Yeah. So if we go back to that one, the top chart, all this is showing is a single relationship with Bitcoin at various points, at various intervals with different looks. We're looking at correlation, we're looking at linear relationship, and we're looking at potential to explain MSTR price movements. Bitcoin by itself counts for half of that. And the reason why that's important is that's accounting for nothing else, and that's not allowing for more specificity in this. This does not include how the volatility ratio of MSTR impacts price. And what that means is if Bitcoin has a volatility of 50%, MSTR will have 100. How does that volatility ratio play out? How does it being twice as volatile as Bitcoin along this time frame impact how the price manifests? That doesn't account for this. And just to be specific, the bottom one for the ATM lovers out there, that is a estimation of what the volume weighted average price is using the 20-day moving average. What does that mean? When strategy issues shares, common shares, they're doing that via VWAP. The VWAP has the volume weighted average price represents the average price representative of trading volume over a trading period. What that chart on the bottom is showing, what that orange line is showing is that is the volume weighted average price at different points in time over the last year using the 20-day moving average of price. The red means that's when price was below the VWAP. The green means what that price was above the VWAP. Just so everyone is aware, it's about 50-50 in terms of being above and below VWAP. What
That
does
was the
that
first
mean?
observation I made to you when you showed me this. I
Yes.
said, if you
Yeah.
just look, what it looks like the square footage of the chart, the red and the green look to be about equal to me. And what does that tell you?
And that is why these algorithms and these execution plans use the volume weighted average price. It is a very, very good way to eliminate bias in entry and exit. So what does that mean? What that means is for everyone saying it's the ATM, they are using the VWAP at different intervals. So they can use it at 20, they can use it at 10, they can use it at 5, but I use 20 because that is a general rule of thumb.
Mhm.
What that means is they've been issuing the shares at the volume weighted average price, and take a look at the green. The price has been well above the volume weighted average price at over half the interval of the time and has been below at different intervals of time. But what does that mean? What that means is the impact of the ATM accounting for nothing else is essentially net neutral.
Adrian, what do you think is the average size of each ATM issuance of the common equity as a percentage of the trading volume? Like,
It
like-
it is depending on the period. It's been between 3 and 6.5%.
so would that be more evidence than for what we're saying?
So if you want to go to the other chart now,
Yep.
with regards to the trading volume and how that's a factor. So
I want people to focus, Adrian, on the information at the bottom, obviously, because
Yeah.
that's like, if you could start explaining this, I think that'd be helpful.
Yeah. So what I've done is a decompositional variance analysis on price. That's a very fancy way of saying, looking back at the data over a period of time, I'm trying to determine what has been impacting the price. So while the other analysis is saying this is what MSTR is doing, while Bitcoin is doing this, therefore MSTR tends to do this. What this analysis is saying is over this period of time, and this one includes options data, so it goes back to December of 2024 through October of 2025. What this analysis is saying, when you account for all of these different variables, both macro, micro, and market, these are the variables that have a statistically valid correlation with price action. And there's a reason why some of them are at 0, and there's a reason why some of them have lower percentage, and there's a reason why some of them have higher percentages. And we can get into all of that. So very simply, what this analysis, this box is saying, if you want to zoom in on it a little bit more, is that the full sample, so going back to 2025, so going back to December of 2024, all the way through October of 2025, this model that I've created, that by the way, I've been working on for the last 2 years, that I've been running for the last 2 years, this model, the explainability of this model can explain up to 67, or if you want to say 70% of the variance in MSTR's price action. The baseline, and this is what's very, very important, the longer you look over the data, the less Bitcoin explains the price action, because the baseline BTC only is 43.9, so 44%. What that's saying is if you're just using Bitcoin and you eliminate the noise in the price, so what this is doing is, if you take a look at the lower incremental RT contribution lines, if you take a look at Bitcoin sentiment, it says plus 0.4%. That's not statistically significant. So that is being removed from the overall analysis. If you
It's
take a look at,
0.4%.
yeah, that's sentiment. So that's Bitcoin fear and greed, and that's Bitcoin sentiment data.
Yep.
That I got from Glassnode, that I got from Bitcoin Magazine Pro, and that I got from other APIs that feed Bitcoin sentiment data. I incorporated that into the analysis. What that 0.4% is saying is, if you account for the sample in the data, it's essentially noise. It doesn't give you any more of an explanation of what is pushing price action more than Bitcoin price. So that's why it's saying 0.4. That is not statistically significant. So what the model is doing, and in case anyone wants to know what's driving this analysis, it's not ChatGPT. It's called a textbook that I actually had to read through to figure out how to do this. What it's saying is that is not statistically significant in the overall sample size. Therefore, you want to account for it, sure, but it's not really important in the overall analysis. Long story short,
Adrian, quick
40.
question, if you don't mind,
Yeah, go ahead.
just for the listeners. Like, if you see the incremental contributions of the BTC direction close to 50% there, and I see like these aren't listed in order by percentage, what would
Correct.
be like the number 2 contribution? Like, is this
Um,
all of them that are part of the analysis, or?
yes,
Okay,
yes.
gotcha.
So what'll be, if you take a look at BTC direction, 49.6%, that's 50%. Let's
Yep.
round it, right? Then you're looking at market volatility. That's the VIX. So that's the index that I
That's
incorporated
fixed.
into the analysis. That's 6%. Then you take a look at the MSTR implied volatility based on options data. That's 2.7%. That's statistically significant. Then you want to look at the open interest change. So the open interest is showing how much open interest in a dollar amount that exists in the entire options market. That by itself is 6.6%.
Yeah.
So what does this mean? Oh, let me really go into the one that's going to piss people off. If you take a look at participation, 0.5%. Participation is trading volume, average dollar turnover, and a participation rate that's calculated based upon that. What does that mean? What that means is, and let's just talk through this in a very, very logical, systematic fashion. For those that want to talk about the ATM is issued into the market as a function of demand of trading volume. What this is saying, and I've run this about 4 dozen times at this point in a variety of different ways. So when I'm on Twitter saying it's not the ATM, I'm not just pulling that out of the air. I've done the analysis on this. What this is saying is, based on standard statistical methodologies, the trading volume, both the dollar amount, the percentage of participation, and the average dollar turnover, which is not the same as the dollar amount, explains 0.5% of variance in MSTR price action. So that means that even if the ATM issuance accounted for 100% of the price variance that is explained by trading volume, since it is a direct function of trading volume, it will still only explain 0.5% of the variance in strategy price action.
Yeah, it's programmed as being a function of the demand, correct? Like it's
Which
like
is
that.
which is why I showed the VWAP.
Yep,
So
exactly.
that is what determines how they issue shares, and that's what people perhaps don't understand or don't want to accept. The ATM is a function of demand. So
Correct.
for people that are saying that, oh, Saylor's issuing shares and that's creating more short interest. Well, here's a flaw in that logic. Issuing shares, you're blaming the road for the direction of the traffic. People short the stock because, as I've been talking about, there's market players, significant market players that do not believe in the model. The number of shares to short doesn't increase the short.
Hmm.
It's the short interest. The proportion is not going to shift. They're still going to be shorting the stock because they do not believe in the validity of the model. So that's the first thing. The second thing, the supply and demand argument. People saying that, well, it's simple supply and demand. You issue more supply, there's not sufficient demand, it's going to drive the price down. Well, you actually have the relationship wrong. The shares are issued as a function of demand. It is not a driver of supply. That's a very, very different, nuanced understanding to have.
That's
The
because
demand,
people aren't familiar with the actual mechanics of how
right?
the shares are issued.
The
So
demand is there.
yes,
That is what allows them to issue shares.
it's a prerequisite. Like it
Yes,
needs to be there. Correct.
correct. Now, in theory, and let me just extend an olive branch. In theory, could they theoretically issue shares at such scale that it overwhelms demand and it pushes down the price? Yes, in theory, but that's not what they're doing because, as you see there with the VWAP, it is designed to be net neutral.
Yeah.
That is the most it's designed to do, is be net neutral. I've done the analysis on the actual ATM shares, and I'm going to be releasing that at some point. In 2024, the ATM, if people want to talk about correlation, was positively correlated with price action. In other words, the more shares they issued, the higher the price went.
Narratives are important.
Yes.
Yeah.
So, and people are probably going to be grumpy in the comments. For those saying it's the ATM, it is not the ATM that's driving price. Theoretically, anything could impact price. I can do a statistical analysis that shows you the weather impacts price if I have precise enough data. That does not mean it's driving price.
Right.
Okay.
It's a like is it fair to frame it like this, Adrian? Like how some people might perceive it and how that influences their trading decisions, that would influence the price.
In theory, but the problem with that is that if you take a look at the actual trading volume, and if you take a look at how these trades are executed, if you take a look at the short interest, the volume does not speak to actors making trading decisions based on how the shares are issued. And also the challenge with it is not as if people are looking at the order book and they can tell, oh, strategy is selling shares. They can make an assumption,
Right.
but it's not driving the price. And even if that were the case, the analysis shows that trading volume it doesn't really explain a lot of the price variance.
Right. Yeah.
It's about at different times, they've had different regimes. In 2022, we had a different set of market narratives. In 2023, we had a different set of market narratives. In 2024, we had a different set. Now in 2025, we have a different set. Strategy has been trading along a trajectory of different market narratives. And when I've done the analysis, when I try to segment it off for 2021, 22, 23, and 24, the results are wildly different. The only thing that remains constant is Bitcoin's explanatory power, which runs between 40 and 60%, depending on the year. Everything else, like for instance, over the entire sample, M2, like global liquidity, is not very, very predictive.
I was going to bring
However,
that up because you have that listed here as one of the contributions. Like
yeah, however,
so the 90-day, Adrian, is that like the 90-day lag that people like to meme about? Is that what I'm seeing?
essentially,
Yeah.
so it takes a while for liquidity to hit the market. So that's the reason why I said, depending on when I've run the analysis and for what year, the impact of M2 is different. So that analysis that I just showed, that overall 90-day window, what that is saying is accounting for the 90 days to allow liquidity to come into the market. M2 since December of 2024 has not been very predictive with MSTR's price action. However, when I've done the analysis going from, I think it was July 2023 to November 2024, it was very, very predictive. That's because M2 was on a steady tick up during that period for certain periods of time. And during the run up that we had at the end of Q4 last year, M2 did like this.
Yeah.
While Bitcoin was going up, while MSTR was going up, while equities were going up. And then M2 started to lag off, and then we had the blow off top in MSTR price.
Yeah.
While they were doing heavy ATM issuance, the price was still going up. So I think people need to understand that they're trying to point to one thing that's driving price, but it's not. And when you do an actual standard and now multivariate statistical analysis of the price action, you see that there are other things that can be actually contributed to the price action, and the ATM is not one of them.
It's amazing research that you've done, man. Phenomenal. And what's really funny is that I think that you were there at the Bitwise UTXO event before the
Yeah.
Bitcoin conference. Saylor talked about literally this. He was talking about the influence of ATM, and he pretty much is confirming everything that this research is saying. And well, I'd say that your research is confirming what he was saying. And yeah, I think great work, man. It's fantastic. I think that's, going back to what we were just saying at the first part of the stream, man, is that many individual actors can be irrational. And I think that you've done an amazing job of showing that ATM's not driving price. That is nonsense. It's nonsensical. It's illogical. And now we can shift the focus, the conversation to the things that do matter.
Well, so here's the funny thing about this. I did this analysis as a way to prove that the ATM was impacting price. That's
And you
actually,
found out otherwise.
yeah, that's actually why I did it, because I initially thought it was, but and I'm not trying to be a jerk here because I know what people do these days. This is called a textbook. I had to read through this to understand how to effectively do this analysis, and I met with my college stats professor to actually stress test what I did. So I know the methodology is correct. I'm saying all of that to kind of bring this up. When you are dealing with an equity that has so many potential impacts, you cannot distill it down to one driver. What you can do is do analysis to figure out what the drivers could be. But even by analysis, this is descriptive. It is not predictive. So it is doing a look back that is saying that over this period of time, accounting for all of these different variables, this is the correlation and potential impact that they've had on price. No one on X is actually doing that. When they're talking about, oh, it's this, oh, it's that, oh, it's this, is this, that, or the other. And I'm trying to help people understand that it helps to take a little bit of ownership in the process and do some analysis. And don't rely on Chat GPT to do it for you. You have to go into it and go into the nitty gritty. I've shown this analysis over the last 2 months, but I've been working on it for the last 2 years.
Mm-hmm. Have you
And
thought
I
about
actually
publishing
started,
this?
I,
How do
so
you? You said that you're working on some additional analysis. Do you plan on releasing all of it together in one master presentation, or how do you plan to present all this? Because this is clearly the result of a lot of effort.
Well, so I've been thinking that through. When I actually started, so what led me to do this analysis, and the reason why I say I've been working on it for 2 years, I actually started doing this on Bitcoin, and I actually started doing this on NVIDIA, and actually started doing this on Tesla. I was trying to see if I can find patterns in the data that, so for Bitcoin, that went beyond the power law, for instance.
Sure.
I wanted to do the analysis myself. And for NVIDIA and for Tesla and for other equities, I wanted to see that, could I find a way to project into the future how these equities would perform? Long story short, I couldn't, but it gave me the impetus to try to crunch numbers in different ways. And then when I got deeper into MSTR in terms of being like a thought leader or whatever you want to call it, I started applying the initial work I did to MSTR, but I already knew I had the framework for it because it worked for Bitcoin. So am I going to release all of it? Here's the challenge that I have. I'm essentially doing all of this just for my own personal edification, and I'm sharing it. I have no problem sharing it, but it's a lot of work.
Yeah.
And the challenge with it is that the ATM piece, I've collated all of the ATM data now going back 2 years. And when I say collated, I mean I've gone through the SEC filings and I've done what the trading volume would be and what the issuances were for each time they bought Bitcoin using shares.
That's a lot of data to be scrubbing, Adrian.
It is. And the challenge that it's given me, and this is where I'm struggling, as the analysis is currently constructed, when I incorporate the ATM data, it doesn't move. Because the trading, the turnover ratio and the participation ratio that directly accounts for trading volume, it's not just like I'm putting this stuff in a spreadsheet and I'm doing a calculation. I have to group the data to find out what the actual correlations that exist in the data set are, and use formulas to find out what's noise and what's signal, essentially, is what I'm doing.
Sure.
Adding the ATM data is just noise at this point. It's
Yeah.
not adding anything to it. So I'm probably going to finish it just to have that level of specificity, and I am going to release it. But just so that everyone knows, the companies that execute these VWAPs and execute the share sales for Strategy, for the Bitcoin miners, and so on and so forth, they do this analysis. That's also what gave me the idea. Strategy is getting printouts. They're getting data from these companies that's telling them, is it impacting price? They're already on top of this. So again, for everyone that wants to point to the ATM or wants to point to any singular driver of price, that is not what is happening.
It's not reality.
No.
Love it. Adrian, this has been a fantastic conversation, man. We should do this again. Amazing stuff. Love talking everything mNAV and ATM. I feel like we've dispelled a lot of FUD out there. And I think that we need to be,
I guarantee you people are still going to come at us about this. I
oh, of
guarantee it.
course. Yeah, because not everybody's watching this, but that's fine, or understanding it. But that's right, man. We can be brothers in arms together. Let's leave them with mNAV is sentiment. ATM's not driving the price, and we're still giga bullish on MSTR and strategy, right? I mean, how can you not be? Is that a fair exit?
Yeah, that's pretty much it. It's mNAV is sentiment. The ATM is not driving price. For people that try to get all slick and say it impacts price, then I say, to what extent? Have you done any analysis? Oh no, you haven't. Okay, thank you. And yes, we're still giga bullish on MSTR.
Love it. All right. To my audience, please follow Adrian Morris on X. Fantastic. You can see his tag right there, Adrian_R_Morris. And follow True North too. They're the guys that helped me get into this trade to begin with. So amazing content from them every single Wednesday night. And Adrian does stuff on the side with them too. So we'll call it good.